knowing the love of who I am, knowing the energy of who I am, knowing the God force within me, knowing the invincibility that I am, knowing then the reason that I'm here, and knowing the all is possibleness of life. Ooh, ooh, ooh. Knowing. We want you to know what we know, and we know everything you want. We know all that you've become, and we never stop offering a vibration in as many words as Esther can find to help to lead you there. We want you to know who you are, and that's what you want to. And when you know it, then you stand in your invincibility, and you feel competition with no one, because when you know what we know, then it's just more wonderful things, just the process never ending. Sometimes humans are a little frustrated because we say, well, you sift and you know what you don't want, you know what you do want, but you're not a vibrational match to it. And then you work to become a vibrational match, and then you stand in that knowing, and then it manifests. But along with that comes a whole new set of contrasting experiences that causes further expansion. So you never quite get it done. You're always reaching into that which you have become. But when you get to this place that you are, and this place that you're wanting to converse with us about, when you get to this place where you know about law of attraction, and you know about momentum, and you know about focus, and you know about your emotions, and even though you sometimes aren't doing it, you still know you could. When you know it, when you have this knowledge, then you don't even mind standing in a place that you don't want to be, because you just call it a beautiful step one moment that's causing you to bounce into another place. When you have this knowing, then there's no fear, then there's no reluctance, then there's no danger ever. In other words, it's what everyone is reaching for. It's what you all find when you reemerge into your knowing. We just don't think you should have to croak to do it. Really. Good morning. We are extremely pleased that you are here. It is good to come together for the purpose of co-creating. Do you agree? Yes. Are you knowing what you are wanting? That's a good thing. Being clear about what you want is so helpful. Being clear about what you want helps you to know what you're doing vibrationally. In other words, if you're clear about what you want, and for some reason you are observing something that opposes it, or remembering something, or believing something that is in contradiction to your desire, if your desire is focused and sharp and clear within you, then your emotional guidance system will let you know the offness of your vibrational mix. So thinking about what you want is so helpful, because it helps you figure out, if you are aware of your guidance system and if you know what your emotions mean, you can feel your level of personal self-destructive opposition to your own desires. And that's so helpful, because it is only your own personal opposition to your own desires that ever holds anything up or slows it down or keeps you from realizing it fully. Did you get that? In other words, no one else can affect you. Oh, well, your attention to them and your reaction to them, and therefore your vibrational response to them, which is included in your vibrational mix, certainly that does affect you, but you have so much more control over your vibrational mix than you know. And being clear about what you want is really an important first step in the stronger activation of your emotional guidance system. If someone called you on the phone and said, hello, you don't know me, I'm just calling you to tell you that I will never call you again, you would not have a strong emotional reaction to that. You'd say, okay, goodbye. But if someone you care about called you and delivered that news to you, you would have a strong emotional response to that, because your desire about your relationship with that person is being challenged by what you believe to be something that's happening in the moment. The condition of the moment and your response to it has activated a vibration within you that's in your way. Well, it seems perfectly logical that under those conditions, and a lot of conditions, that you would feel negative emotion, and you certainly would be justified in proclaiming your justification. We get it. When life comes to you, or it feels like it comes at you, it's really coming to you in response to your vibration. Law of attraction is bringing it to you. But when it comes to you, sometimes you feel like you need to be on the defensive because what's coming feels offensive to you. And so many humans get into a place of justification or rationalization, defensive stance, where you're trying to hold away from you the things that you do not want, but your attention to them, your observation of them, doesn't hold them away. It causes you to be an active vibrational partner. And when you are an active participant in some thought or response or reaction, knee-jerk reaction to something, now it's in your mix. And when it's in your mix, you are going to feel emotional response to what that mix is. And that is such a good thing. If someone says to you, you seem to be in a really terrible mood, what you want to say to them, my emotional guidance system is working really well, and I can feel that I'm really messing something up that matters to me a lot. They'll be shocked to hear you take responsibility for your mix. But unless you are, if you say, oh yeah, you know what that guy did? You know what that person did over there? That person did this thing and it made me feel this way. Well, we're not questioning that. We know that your response to life does cause emotions within you, but we want you to gain control, not of your emotions, of your focus, and therefore of your emotions. We want you to get so good at including what you want in your vibrational mix that there's hardly any airtime for what you don't want. We want you to just be unwilling to beat that drum of unwanted so quickly and responsively and reactively. We want you to be so clear about what you want and your own desires to be so active in your vibration.
all right. It is 9 a.m. Central Standard Time. We are going to go ahead and get started. It is our last and final day, so we want to take and maximize every single moment of this next 40 hour and 15 minutes. So good morning, Miss Tony. Good morning, Miss Mom. Good morning, Miss Fleming. We have a Kahoot ready to go. It is the final day, so please log in www.kahoot.it, and the game pin is 7318257 7318257. If you are and have been enjoying this stock market basics class for adults, what would you do with $100,000? Please share it with your network and let your adult friends know that they can come here in this safe space and learn without feeling foolish. That would be awesome. That would be awesome. So I'm just gonna let you all get in. I hope everybody had a good week. There we go. Tam is in. I did not mean to start it. Oh my goodness, it started automatically. Let me stop it. Let me stop it.
Okay.
Oh man, wait a minute. I can't stop it. Hold up. No, you're not gonna control me. Hold up. Let me fix that. That should not have been automatic.
Give me the pen again. Mine.
No, it's gonna give a new pin. It's gonna give a new pin. Give me one
okay.
second.
All right. Good morning, Tamara.
Good morning. How are you?
Good. That's such a pretty picture of you.
Oh, thank you. Thank you. That's my quarantine photo. I love your glasses.
Thank you. Dollar store. I got them all kind of colors.
Those are nice. So those are just readers then?
Right, just readers. Mm-hmm.
Nice.
Yeah. Need a little color in my life.
That's crazy.
So I should go back and read. Wait, hold on one second.
Yeah, it's gonna give a new
pen. Okay.
New pen, but you know, it's like when I don't prep, I feel rushed, but things go smoother. When I prep and night before and I do all this stuff, it's like it's crazy. It's crazy. I done did all this stuff, ready to go. Let me see what's going on here.
We have the power, so.
Oh yeah, we're good. We're good.
We have the power.
I mean, this ain't nothing to worry about. This is not a problem, right? All right, here we go.
Morning, Dr. Durr. Oh boy.
Here we go. Okay. Let's try this.
Morning, Dr. Durr.
Good morning.
I'm gonna turn that off. Okay.
Love the hat.
Thank you. Here we go. Okay. New pen. Boom. Here we go. 315-9744. 315-9744. 315-9744.
Okay, hold on. Say Kahoot. What? So it's just Kahoot.it, right?
Yes.
Okay. 315-9744.
There we go. Tony, I don't know if you can hear. I'm gonna. I don't want to assume.
I can hear.
Are you joining in the game?
Yes.
Okay, great.
So I got a question. It says you're in, see your nickname on screen, and I do see it, but then it doesn't. That's all. That's where we need to be, right?
Yeah. Yeah.
Good morning, Miss Tony.
Good morning.
Morning, Tony.
Good morning. Good morning, Mom.
Lot of stuff to talk about this week that we could talk about this week.
Miss Rosemary, it looks like we just lost you.
You kicked yourself out?
It says I'm back in.
There you go. It does.
Yeah, it just seems like it has a mind of its own today.
All right, we're gonna go one. We can't even. We're gonna go 30 seconds. 30 more seconds, Miss Tony. Then you'll be able to just get in where you fit in.
Okay.
Good morning, everybody.
Good morning, Shamel.
Morning.
Hey, Shamel.
Okay, there she is. There she is. Mel, I'm gonna trust that you know how to get caught up. So we're gonna go, because time is not our friend today. All right, so this is the first one. I just want to check the temperature. How are you feeling about investing? What would you say your level of investing, your understanding about investing is today?
I missed the pen.
315-9744. 315-97. Somebody that need more training. I'm very confident. 315-9744. Okay, here's a quick. Owners of blank can vote for the board of directors and on issues that come up at or during annual meetings. If you own what? Common stock, yes. I wonder if I have it pulled up. I just got an email because I own, I do some investing in through Cash App, and they actually just sent me a ballot for one of the companies that I'm invested in, and I was allowed to vote on the board of directors. I believe it was Moderna. Was allowed to vote on the board of directors and things like that. So that was interesting. All right. Last in, first on the board. Blank are issued by corporations and by governments to raise funds. Now, we didn't really talk about this, but we'll talk about it now. Take your best shot. That's right. So I guess we don't have to talk about it. You all know what they are. Okay. That works. Bonds are IOUs. Guaranteed. Investors can invest their money in a Let me just pause for 1 second here. Do you all understand nonprofits when it comes to generating profits? So let me ask this question. Can nonprofits have profits?
Yes.
Yes.
Yeah.
Yes, they can. Yeah.
Mm-hmm. They're expected to. They better.
Mhm.
Nonprofits are businesses. All businesses are expected to generate some profit, right? The only difference, anybody tell me what the difference is between the profits for a nonprofit and the profits for a for-profit?
I think a nonprofit can't invest its earnings.
They can invest their earnings. They absolutely can. They can invest their earnings. So that's a great answer. I get that. But actually, one of the boards that I sit on has a $500,000 endowment that's sitting in a trust. So yes, they can. They can invest.
So what can't they do?
They can't disperse their profits to people.
Oh, okay.
That's
So
the
they
only
can't-
difference. They have to reinvest their profits back into the mission of the organization.
Okay.
Where for profit, hey, if I want to go buy me a boat, I can. If I want to pay dividends, I can. If I want to pay bonuses, I can.
Okay.
It's the only difference. The only difference.
Can't you pay? You can pay bonuses in a not-for-profit.
You actually can pay. You can, because we just did it at Chicago Youth Programs. You can pay bonuses as a non-for-profit. Yes, you can, but you cannot. There are no shareholders. But those bonuses that we pay and that nonprofits pay to their employees is seen as a reinvestment. You're giving it
Right.
back to the people.
Right.
As
Yeah, I'm
opposed
just
to
saying, but it's,
shareholders.
right. It's invested within the company, but within
That's
the
right.
company, you can issue bonuses.
Yes.
You can't just
Very
go outside of the company issuing money or profits.
Very good.
Right.
Very good catch. Very good
Okay,
catch.
okay.
Absolutely. All right. When Erica buys shares of No Limit Food stock, she becomes a what?
Is that Master P?
That was. All right. A public company sells its shares to the SEC, Securities and Exchange Commission. Is that true or false? Where y'all at with y'all answers? There we go. Okay. Based on the rule of 72, if you invested money and earned 9% interest, your money would double in. Let's see if you really know. I put a couple in here to see if you knew.
72.
Based on the rule of 72.
I'm gonna take a guess. I don't know.
3 seconds. 1 second. Come on, y'all. Come on. Very good. Those who got that right, what did you do?
9 times 8 is 72.
Well,
Exactly.
close. Just divide the interest rate by 72.
Okay.
All the time. All the
Okay.
time. So when we go to look at your portfolios, so obviously a negative I'll never return, right? But if we go look at anybody else's, and of course we're going to use our leader, may as well. So if you take her 359.28 and divide that by 72, her money doubles how fast? So what was that? 358, 359? I'll just do the solid 359.
Four and a half, it's over 4, right?
So every 4 years, 5 years, almost 5 years, 4.9 years, almost 5 years, her money is doubling.
So
That's
we're
great.
dividing the interest by 72.
Yes.
Okay.
Yes.
Okay.
Yes.
Oh.
Yes.
No, you actually do it the other way around. The rule is 72, so you did 72 divided by the interest.
Oh, 72 divided by the interest.
Mail coming up. Okay, let's go. If the board of directors of Amazon vote to share some of the profits with the shareholders, they would have decided to what? Issue dividends. Issue dividends. There we go. Okay. Investing means what? Uh-oh, we lost Mel. All right. When Rose Notes Incorporated decides to go public, it will issue what? We lost Mel. She'll be back in a second, I'm sure. An IPO, initial public offering. IPO. Very good. True or false? When Ballin and Company decide to go public, it can choose to be listed on any of the stock exchanges. Is that true?
You say any, mine is not coming up, so I'm gonna say false.
Okay.
I'm stuck at 10. It didn't roll over.
False is the correct answer. The SEC decides, and the structure of the company determines which exchange is traded on. So not the company itself. They don't get to say where they're traded. In general, the blank the risk, the blank the possible return on your investment.
The
Do a refresh on your screen. See if that happens. Just refresh.
Well, I'm using my
Go out and
phone.
come back in.
Yeah, okay, here. Are you sure you want to quit? No, I don't want to quit. Okay. The greater the risk, the greater the...
The less the less.
Yeah,
The less the risk, the less the possible return on your investment.
yeah. Mhm.
Okay.
Am I still in the game?
Your name is still on the screen,
I don't know what's going
but
on.
we
Let me
did
see.
lose you.
Yeah.
Yeah. That was
Shamel
fun.
purchases 100 shares of Moderna for $35.50 and sells it for $46.25. What was her profit?
You lost some money, Shamel.
She did.
Oh, she sold it for 46. Oh God, I wasn't paying attention. She gained.
And do that quick math. You got to do that. 100 was
Yeah.
100 is that quick math. So you just separate the 35, subtract
Right.
the 35.50 from the 46.25 times 100. You know.
I was dazzled by the red.
So it's a gain of 1,075. A gain of 1,075. True or false?
Okay.
All publicly traded companies pay dividends.
False.
There we go. There we go. Everybody's back in. Follow with I don't even know what this is. I think that snuck in there. Let's go. That's not ours. Wait a minute. That's not ours either. So I know. Oh, I think that's it. Oh, I know what happened. That's all the questions. So let me see. Let me see. This wasn't done right, but let's see. Yeah, those are all of our questions. I only had like 12 questions. Okay. All right. I had 13 questions. So all right, Dr. Ballender. 13 out of 13. Congratulations.
Great.
Congratulations.
Great.
You are a savvy investor.
Well, at least at least in terms of a test, but I need to translate that to profits.
Well, ain't that a blip? That's usually how it works in schools. They want to test these kids, and that's supposed to be the determination of how well they'll do in life. And that ain't it. That just ain't it. That test don't mean nothing other than they know how to study
And how to take the test.
I know how to take a test. But to your point, what's happening in real world application? So let's go to yours, Dr. Dirk, because you are at the bottom of the bottom. What have you been doing?
Well, what have I been doing?
And you're outperforming the S&P 500.
No, that's Sunlight Warrior.
Oh, that is Sunlight Warrior. That is not you. I got that. I've had that confused since day one. There you are. You are not at the bottom of the bottom. Okay.
Yeah.
All right. All right. So you're hemorrhaging cash, but you do have a little cash in the bank, and you can borrow 47,000. You're down
Yes.
about
So the issue with
7,000.
me is, of course, I got so much other stuff going on that I'm dealing with that that I really haven't had much time to pay attention to it. I just
But that's not what we know from Pearl Ray's portfolio. That ain't it, because she ain't touched her since January 2nd.
Right, but here's so what I'm getting at in terms of it's a couple things. Number one, because of when we early on, I bought Tesla at a much higher price than what I really wanted to, because I'm looking at the fact that we were in the 3-4 week class, right? So if without me feeling like I needed to do something, then I would have waited for that price to come down. So I bought it at much higher than I wanted to. Again, took the position of holding and for the long-term investment, because otherwise, to be honest with you, I would have traded it in order to get back some of those profits. But again, I'm doing the buy and hold. And then the other thing too that I wanted to do, and I looked at it once this week, and so it was, I don't know, I think it was back up to $600 something, which is maybe where it is right now. But what I really wanted to do is to really kind of take some time and find some more emerging stocks rather than just kind of investing in what I already have. And so again, because I haven't had time, as you can see, I haven't done anything. It's sitting where it was last couple of weeks, frankly.
Yep. And that's all you should be thinking about at this point. Really, the game is almost counterproductive, but because the real of it is, we should be setting this and forgetting it. We should just be setting it. We should not be worried about checking these stocks every single day. That is actually goes against what I'm preaching with the buy and hold. We got to get to a point for this type of investing of just letting it sit, letting it ride, right? So your Tesla is going to far exceed your 847 in the near future. I mean, it's scheduled. It's anticipated to hit the 1,000 mark by the end of the year. So no big deal, right? You bought it at a high. That was a mistake, but what we're all realizing at some point after every down there's an up. After every up there's a down. It's just we don't know how low it will go. How low can it go? I just love doing it. How low can you go? And we don't know how low, and we don't know how long. We don't know how high, and we don't know how long. But historically, generally speaking, after every low there's a high. After every high there's a low. So you'll make your money back off the Tesla. How do we know? Well, we don't know, because nobody knows what the market would do. But I will say, does everybody remember the faux pas that Miss Rosemary Stewart, made with GameStop? Does anybody remember that faux pas?
Yes.
What happened, Dr. Durr?
She bought something she knew nothing about.
And what happened to the stock price?
and she got crushed.
She got crushed.
Yeah, because the battle that was going on between the everyday investors versus the institutional, they drove the price up, and then of course
Look,
it
let's
fell.
right. That's cool. That's cool. Her GameStop went all the way down to $40 and she panicked. She wanted to sell it. I said leave it alone. For the sake of this game, leave it alone. It's back up to 264.
Good for you, Miss Rosemary.
It's just the nature of of stocks.
Of stock, yeah.
Now, we still don't know. She still don't know much. I mean, she's right here. I mean, you don't know anything about GameStop still. I mean, but now's a good time to get out if you want to get out because you know better now. You had no business investing in it, but now you're up 890. You can get out. Now, but you also could say, well, you know what? This is a game. I still don't know, and let me learn. Let me just leave it alone. Inevitably, it's gonna dip again. Go down, down, down. Then what you can practice is, anybody know what the practice is when it dips?
Buy more.
Buy more. Buy more. Great opportunity to double up those investments. They'll double up that profit opportunity.
You know what? Looking at this, I've been really busy, so I haven't had a chance to. I haven't taken the time to check my portfolio. I'm curious, so I will do the research and find out what's going on with J.P. Morgan. That it's on the rise, and it's been on the, it's been in the black for a few weeks.
So let's take a look at that because JP Chase this is talk about generational money, right? They one of the controlling entities of what's happening. But don't get fooled. Don't just think that they constantly up. Everybody has ups and downs.
Right.
Everybody has ups and downs. But to your point, you do want to do the research. What is JP Morgan Chase and Company all about?
Money.
Yeah, I mean, what's driving
it? Where are they making the money? Because these are some of these companies. Here's the sad, harsh truth for us. A lot of these companies started with their money off slaves. This is slave money, y'all. This is our money. This is off our backs. Still getting money off of us. You know, I'm gonna get on this soapbox for a hot second. You know, because this is the week of the Epiphany, is that we are still in this slave mentality as black folks, right? We know this, right? But I mean, like, no. We don't know. We still are, all of us, me, Dr. Durr, with all your intelligence, Shamel with all of her smarts, Tony, all of us, we still are in an open wound from slavery. We are in a post-traumatic, it's here, it's live as well, because we haven't figured out how to be patient with our money. We're still in this space of we got the emotional connection to the money, and we still in the consumer mindset. The fact I'm frustrated now that everybody like, where my stimulus check at? Where my money at?
Excuse me. My sister called me this morning at 6:15 to tell me to check my bank account.
That's look, that's the slave mentality.
I said, girl, goodbye.
Yeah.
I'm asleep.
And look, people ain't got the money, already know what they're gonna do with the money.
Oh, God.
That's cool. I know what I'm gonna do with mine too. Set it and forget it. Some of it anyway. Some of it, I mean, yes, you got bills, you got debt, all of that. But, so some of these companies that we are investing in, me too, we don't really know enough about them. But some of this money is institutional money, some of this money is slave money, and some of these businesses have made their wealth off of the backs of our downfall, right? And so we're still, what are we, 300, 200 years out of it? Is that 2 generations, 3 generations? So,
Well, but to your point, it's just slavery by another name. So as long as you have the mindset and the mentality of a slave, you still living like one, despite the fact that you're not physically bound, to a plantation in a particular master.
Mhm.
So, but you see all the other behavior and evidence of it. So one thing I wanted to say about this is, I mean, there's a couple things. Number one, I actually had trauma as a kid about money. I mean, I was seriously traumatized about money. And it was only really, I thought I had worked through it, but like, I think it was 2016 where I realized I wasn't. And I mean, like physically, I get like, I don't want to deal with money, and the fear and the anxiety and the whatever. So I'm forcing myself to do this. And I had shared some of this with you about the reason I wanted to take your class because of that. But in having to try to work through that, one of the things I've done is, like, I think at this point I've got like actually a year and a half of expenses in savings.
oh, that's great.
Which is not what the average person has, but so I'm at least comfortable in that regard. But what I'm working to do in this case, of course, is to learn how to use as a friend of mine says, you want to have your money making money while you're asleep. Right. So that's what I'm working to do here. One of the things I actually know because of a documentary I saw, it was excellent, on it's called The Men Who Made America. And so one of the folks they featured in there was the Rockefellers and the Vanderbilts, but there was also JP Morgan was in there. So at that point when they were talking about it, he was like 3rd generation. And it showed basically how his father trained him up to be a banker, and how basically his father was, you need to take the conservative approach. There's certain things we just don't invest in or do. And so one of the things that Pierpont did, the son, was he invested in DC electricity, which was Edison, of course, which was competing with Tesla, who developed AC. And so, of course, he lost a lot of money. And he said, okay, I'm gonna go back and do this the way my daddy did it, which was basically, he forced Edison out and made it General Electric, changed the name to General Electric, forced Edison out of his company, changed the company to General Electric. And then he also, bought up General Electric and got the patents that Tesla had released to Westinghouse, because he bought a Westinghouse. So it was really interesting, but the whole point is the whole mindset of money and how you make money and how you, again, do it conservatively, and you just do the slow gains over time, as opposed to stuff that's really risky and you don't really know anything about.
The other thing I want to add to that is that there is no limit in money. The money is not limited. Money is unlimited. Everybody can be a multi-billionaire. Everybody could be. But because of our mindset, that's what's preventing it. So some of us do have fears about money, fears or traumas about money. Making too much of it is like, not having it, messing it up, inadequacies, all of these things around money. And I've said from the January 2nd date, like this is one of the reasons this is important to us as Black folks, because we got to get used to even handling it and talking about it and calculating it beyond $100 or $200 or $300. So I thought it was absolutely phenomenal to be able to do play with $100,000, with the objective being of learning how to grow it. And part of that, the number one, well, it's not my number one, but it should be, is be patient. Be patient with your money. Be patient. Hey, Miss Martin, how are you this morning?
All right.
All right.
Morning.
Good morning.
So we're having this final day. We're having some grown folk educated talk about getting used to being around this money,
Okay.
right? And we know some of us know, like, rich and wealthy ain't loud.
Mhm.
When you
That's
start getting money, you don't want people to know you got money.
That's true.
You don't want people to know you got money. You start getting money. Now, let me go back. Mom, Miss
Yes.
Rosemary Stewart,
Yes, sir.
I want you to get out of this debt. You got to
Yes,
get out
sir.
of debt.
Yes,
Okay.
sir.
So you're only down $1,700, $1,800. That's all you're down. Right? But you don't have, I mean, you 73 in the hole, 74,000 in the hole. But your portfolio is worth 170,000. So you can get out of the hole.
Okay.
But I don't necessarily recommend selling off. And so, well, look. So let me be very, very clear. I'm not gonna even recommend what to do.
Mm-hmm.
I want us to figure out a strategy. Right? Let me tell you this story. This is Stu's moment of disclosure. Gee whiz. There was a period in my life. I was working, good money, and I'm talking about living. Oh, it was terrible. It's embarrassing to say. But I would rather have cash than pay bills. I would rather have the cash. I know how ComEd. I know when ComEd send the pink slip. I know when they send it. I got 4 months. I got 4 months
Mm-hmm.
before they send and they still gonna work with me, right? I had that down to a science. But the one thing that I was doing was I was deliberately overdrafting my bank account. And then when my paycheck would hit, I'd let that take care of the negative balance. If that makes sense, right? I mean, it doesn't make sense, but I think you understand what I'm saying. It's just like, it's so ridiculous. It's so I would have cash, counts negative, but I got cash. I can go out. I can go eat, right? But my account is negative, and I'm waiting on the next paycheck to kind of absorb that and so it'll eat that 73,000, right? So let's say the paycheck is 75,000. 73 goes to the negative. I got 2,000, and I'm doing it over again, right? So we talk about these traumas around this money, right? That's real. So in this case, you actually have $170,000 in your portfolio, right?
Mm-hmm.
But your cash is nothing in the bank. There's nothing in the bank. So where do we help? How do you get yourself out of it? So look, I honestly, I could cut my alphabet. I could cut my Google. Let me cut it. You know why? Because you're up 3,700. So if you sold, now this is just what I might do. I might sell all of my Google. That puts 41,000 back into my account. I only need to get out 74,000. So that's 41. Where else can I kind of cut an expense, right? So I wish I could do it at Netflix. But if I cut Netflix, if I sell all of my 80 shares of Netflix, I'm still down $3,000. So maybe not there. Another one is Amazon. If I sold all of my Amazon, maybe I could do it there. But no, let me sell half of my Netflix and half of my Amazon. Well, in this case, 7. If I sell half of my Netflix, that gives me 20. I sell all of my Google, I'm at 61. Let me sell half of my Amazon, maybe. Now I'm back in the profit, and I still am only down, this $1,700, $1,800. And now I'm back up with cash. I'm in positive cash flow, and I still can make other investments to increase my gains. That's one thing I might do. Now, my brain operates different than a lot of people, so I process stuff, especially numbers and think. I process complex things really, really fast. Simple stuff, I look like an idiot sometimes. Hard stuff, I can get some of it. So, but what I just did that make sense to any of you?
It did.
Mhm.
And it keeps me in the game, and actually, it keeps me with some Netflix stock.
Okay.
Maybe I sell 60 of my Netflix, 60 shares, and then because Netflix is coming back up.
So that was going to say the other thing that you also did by doing that, for instance, so if you think Netflix is, I was just looking at this as you were talking about it. So if you think Netflix is a good company and it's going to come back and go past where she bought it before, she could actually buy it now while it's down. She
But
could,
now I wouldn't buy anything right now because the objective is to getting her out of.
Mhm.
I want her to get cash positive. Now look, and I'm saying it what I want for. I want this portfolio to be cash positive. This portfolio is not cash positive. So let's get at least some cash back in this portfolio.
no, I wasn't saying one or the other. I'm saying once you get cash positive,
Once you get cash positive, you can buy more.
once you
Yes.
get cash positive,
Buy
then
the
she
dip.
could actually look at maybe buying back some more of her Netflix because
Yes.
it's at a lower price than what she bought it before,
Yes.
especially if she thinks it's going to go up. So I'm
So-
just saying both. Get the cash positive and consider buying some more Netflix.
Buy the
Okay,
dip.
so let
Right.
me ask you something, Scott. You just said something that opened a curiosity door for me. So the strategy that you were just, talking out, is that the kind of strategy that, what's the term? Our manager,
A broker?
a broker would use?
No.
Okay.
No. The broker is only executing the trade.
Oh, wow.
They're not your fund manager.
Okay. So is
The
that?
fund manager manages the profitability of the
Okay.
fund.
Okay.
Because in this case, this is a mutual fund.
Mhm.
This is the Rosemary Stewart at gmail.com's mutual fund. What makes it a mutual fund? It's one investment that has a bunch of different stocks.
Mhm.
So we are getting to a point where we're not concerned. I don't care about the individual stocks anymore. I'm just looking at the overall total gain and loss for this portfolio,
I see.
which is a fund. You
Okay.
get it?
Okay. And you say the broker just executes the sale.
Trade, just a trade.
Executes the trade.
And it's a trade is a buy or a sell.
Right.
The fund manager worries about the fund manager does what I just did.
Mm-hmm.
Okay, let's get this portfolio's underperforming. Let's get it to performing.
Right. Okay.
All right, so we move some stuff around for you, Miss Stewart, based on, right? Because I ain't making no money if you losing money.
Mm-hmm. Mm-hmm.
I'm making money. I'll take. Now this is you want me. Y'all want to see something complex?
Sure.
You want to see something complex? This how the brokers make money. It's legal, but it feels so illegal. It feels illegal, but it's legal. They skimming. Skimming is illegal, but they do it another way. They're taking their fee. I don't even know if I can really show you here, but let's say, all right, let me play with the Dogecoin. Okay, can you see this? Where is my oh, here we go. Can you see this right here? It's up 0.001247 Y'all see that amount?
Yeah.
It's like less than a penny, right? Like really, really less than a penny, right? This coin is only barely 6 cents. It's like 5 cents, almost 6 cents, right? So brokerage firms, what they're doing is, you know, this actual amount could extend out a few more digits. They're taking some of those fractions of a penny per transaction, and that's what's making it add up. Like, because they're doing millions of these a day, buys and sells, right? Millions a day, and they're just taking like 0.00012, you know, add another, like they're taking a thousandth of a penny per transaction, and they're doing 1 million of these trades a day, which is how these platforms are making money. That's how your fund manager is making money, because they're taking fractions of a penny per trade. And so remember, we don't really care about how much the stock is improving, increasing, or decreasing. What we care about is the percentage of increase. That's what you got to focus on, the percentage of increase. Because if I go, then why is it important to focus on the percentage of increase? Because you probably won't buy, I mean, unless you know, I mean, most of us won't buy an entire share of Tesla. Like, if you had $693, I wouldn't even recommend go buy one share of Tesla. Then you're gonna be forever making money off of one share. And so this is where you make, you know, you can get it to, you can buy a fraction of a share. You can put $10, $20 on it, right? And so no matter what the stock price is, if it's $10, $20, you will see the benefit of the percent increase. So if Tesla increases 100% today, your investment increased 100% today. Tesla makes more money, but you get the same percent of increase. That's the mind shift there.
So, Scott, can I ask you something? Because I want to say what I hear you saying, and correct me if I'm wrong. One of the things I think about is we have a tendency to say I only got
limits,
and
that's the trigger. Yep.
Yeah, and so when you say I only got, then there's a tendency not to do anything with it. But if you stop thinking of it as I only got,
yeah,
and still say if it's $1, or if it's $10, or if it's 100, or if it's 1,000, no matter how much it is, it's still going to increase by this percentage.
Absolutely.
Whatever the stock is doing. So, and then the thing of it is just, I'm gonna just make up. Say if you invested $10, it's not $100, 1,000, or whatever, but over time, that $10 is still going to increase in value over time.
Yes.
Compared to if you just took the $10 and did nothing with it. And so you just got $10 over time, as opposed to whatever the percentage is, the increase that if you'd have just gone ahead and invested the $10. Is that what I'm hearing you saying?
Yes.
I mean, inherent in the message.
Yes, that is exactly it. And I admit, I'm no different. I'm working through my own financial traumas, right? And operating in lack is one of them. So to your point, as subtle as it is, when I say, but I only got, or you only, that is reinforcing that negative association with the money. So you're absolutely right.
Okay. So,
and I
so that's
appreciate
right.
you calling me on it.
No. But I'm saying, actually, I think you're suggesting the other. No, I think you're suggesting the other, which is, don't look at it as I only got. Look at it however much it is.
That's what I'm trying to say.
Right. That's what I'm saying. That's what I hear you saying, which is, don't say I only got. Say however much it is, it's still going to increase by this percentage. That's what I was trying to confirm. That's what I'm hearing from you.
That is what you're trying. That is what you're hearing from me. I'm working to communicate that. So I teach this exact same class. It's so amazing. It's so amazing. And I don't want you to feel bad by this. But I teach this exact same class to as young as 6th graders and high school students. So everybody, because this is not hard, right? But many of us are just at the same place. But I tell my students, my younger students, I say, look, you're getting $20 today or whatever for being in whatever. You got $20. And I remind people there's only one thing that money does. It's only one. You can argue with me about this all you want. Money only gives us choices. Nothing else. Nothing else. So, Dr. Durr, you live in a house, I live in a house. Right? But you may have this, elaborate. I may have something that's more modest, right? More humble, right? But we both live in a house. You're going to eat today. I'm going to eat today, right? But I can decide to take this $20 and go out to eat. But if I do that, trust, whatever I eat is going down the drain. So I got $20 to go eat. Maybe I start trying to say, you know what? I won't spend the $20 on eating. I'll spend 10 on eating, put the other 10 into my Robinhood account or into my TD Ameritrade account. I'll eat the peanut butter and jelly sandwich today. Or I'll eat tuna and crackers today. Right? Like, I want them to start thinking about this from that perspective, because you have to start with something. I don't want you to look at the stock price and be like, the other one that's right now that people are sleeping on right now. Don't pay attention to me. But this Bitcoin thing, this cryptocurrency thing, and I know a lot of us don't know anything about it. Don't worry, you don't have to. But here's the thing about Bitcoin, to your point, Dr. Durr. Bitcoin is expected to hit 100,000 by the end of the year. So let's just call it right now. I know it's at 59,000. Let's just call it at 50,000. So if it hits 100,000, that's 100% increase. So if you put $10 and let it sit, it's going to increase 100%. You put $100 and it hits, it's going to increase 100%. Right? You don't have to be like, oh, I can't get in Bitcoin because it's 60. I missed the mark. No, you didn't. This is the beginning. Bitcoin is expected to get to 1 million. It's expected to get 100,000 this year. And at the rate that it's going now, because what was it 3 months ago? 3 months ago, it was 19. Because it's up 40. It's at 59. So it was only 19 3 months ago. A year ago, it was 5,000. A year ago, it's 59,000 today. 5 years ago, it was $500. 5 years ago. So at this rate of increase, it'll be 100,000 by July. If it keeps it up.
Why would you say, why would you say that not that you said this directly, but indirectly, kind of like we don't have to worry about this now, I guess, because I'm thinking, won't this be something that we should all be looking towards getting into, just to not, I guess just to jump on the bandwagon for opportunity?
So I have to be very, very careful that I'm not giving investment recommendations. That's why I've tried to speak the way I speak, right? Because I don't, none of y'all can come to me and say, well, Mr. Stewart, you said I should buy this. Nope, I didn't. Right? So for me, right, I believe, there are a couple of principles that I believe in. So in order to know if anything is going to have some longevity, particularly in business or investing, it needs to last at least 10 years. Right? It has to, it's the 10-year mark, still a long game, right? Bitcoin is 12 years old. Bitcoin ain't going nowhere. In the beginning, it was like, what's this? What's this? It was 3 cents a coin. 3 cents a coin 11, 12 years ago. What is this? What is this? What is it? So now, and still, trust me, we're still at the beginning 12 years later, because everybody's still like, a lot of people are still like, what is it? How does it work? Nobody really understands it. Very few people do. We don't know what's real or what's not real. Is it going to crash? And so for me, I believe Bitcoin is here for the long term. Like Bitcoin is the way, it's the new way, it's money. Bitcoin is the new currency. Y'all remember, you go back to those old movies, like this is an actual stock certificate. Right? This is an actual stock certificate. This is paper. This is proof of ownership. This is your value. Somebody come over, they want your furs and your minks and your grains, and you go into your war chest and you break out X amount of these papers and you give them this. And this is before, this is around, the beginning of paper dollars, right? And so now we're all digital, right? Everybody's swiping the cards. And the next iteration is, cryptocurrency. In the news, what did I just see? Somebody big just like bought, this has made like a huge, ridiculous investment. It's a bank. I think it was a bank. Just made a huge investment in cryptocurrency. I was like, the bank is doing it? The bank that tried to fight these people 10 years ago, that wasn't honoring cryptocurrency 10, 12 years ago, now they're investing in it? Oh, get in on it. Get in. This is the beginning. It's still the beginning. That's my point. That's what I'm trying to communicate tomorrow.
Okay.
And in addition, going back to what, hey, look, if you wanted to, $10. You got a little money, 100. You got a little more money, put 1,000 on it. You got some real money, put 10 on it. You know what I mean?
That's real money.
That's real money right there. That's 10 bands right there. Let's go. If you ain't got no money, put $10 on it. You really don't have no money, put $1 on it. Start there. Because if it goes to $1 million, your dollar is good. Your dollar is going to be good. What percentage increase is that? I can't even calculate it, right? From 59,000 to $1 million, that's a tremendous increase. And if you don't believe that stock prices could ever get that high, check out the guy we all know and love. Y'all know who this guy is?
Oh yeah.
Personal.
Which is like what, 50,000 or so per share?
Nah.
Warren Buffett.
Nah.
How much? Oh, okay. 394. Okay.
And he's up. He was up after hours. I mean, he lost 750. This stock lost $751 a share, but it's only 0.19%. Right? And it's up since the max is up 5,000%.
So I have a question. Mm-hmm. So with the game, can we actually buy a fraction of stocks?
No, not in the game.
I didn't think so.
Not fractional shares in the game. No.
Okay.
I know that I think it's Stash lets you do fractional shares, or either Acorns, one of those.
Stash, Acorn, Coinbase. I think Coinbase is just crypto. Stash, Acorn, Robinhood, Cash App, all let you do fractional shares.
Would you trust Cash App for buying Bitcoin and fractionals?
Yes, I do.
Okay.
I do trust Cash App. I'm trying to get out of Robinhood. I'm starting to not. I don't rock with Robinhood no more, even though I'm still in. I need to get out because I'm hearing it's too much. Robinhood. They withheld information about how they make money. They made everybody think it was really free, when really they skimming off the top, but it's embedded in their T's and C's, terms and conditions. And so I just don't like Robinhood. Robinhood prevented folks from getting in on their GameStop. They prevented folks from making money. So I didn't like that. But you know, I'm me leaving Robinhood.
Except the institutional investors.
Right. And so this whole investing game is still rigged. It's still very, very rigged. Like when a company goes public, we can't buy that right away. The institutional investors, they get to drive the price up. They make all the money. They laughing all the way to the bank, and then we get the kind of what's left over. But they've already made their millions and billions off of it. And I don't even try to compete with them and think about them too much anyway, because they're buying 100,000 shares at a time, 500,000 shares at a time, 1,000,000 shares at a time. There's no way I could compete with that. I don't even, not today. Go ahead, Erica.
Oh yeah, I have a question. I noticed that I have Stash, and they now have stock IPO parties.
Oh.
Yeah. So you can buy, if it's something about to come out, they have a listing now of new IPOs that's coming out every month. And so they'll send a notice to your phone that says, come join the IPO party.
Yeah, I need that. That's a reason to join, to get over. And that's actually probably a little bit more of the advanced class, right? Right? And like we have to like, what's that? What's happening with this IPO, and how do you know, and how do you get in? And that's I like that, right?
Yes, and you buy fraction shares of that as well. They actually sell it less than what the actual before it comes out. They let you buy it for a lower price.
That's what it should be.
Yeah.
So like this Roblox went public this week. Roblox is a gaming app, right? But by the time it hit the public market, it was already $70.69 a share. Yeah. So you see what the general folks like us do, all right? We get it, okay? We get it at 70.69, thinking we about to do something. It goes up a little, starts to hit this downturn, and this is where we panic. It dipped, and then many of us, because we don't know, we get scared. Well, somebody asked me about investing in Roblox this week. Should I get it? I said just wait a couple of days, let it settle. And so it hit the market, open market at $70.69. And right now it's at $69.70. So it's down like, just a few pennies. But I would even say I probably would wait just even a few more days. Let it come down some more before I get in. That's what happened when I did with DoorDash. I was really trying to get on DoorDash. I was trying so hard. I was like, why can't I get in? This is when I realized, like, so they not letting us in. Oh, okay. And by the time I could get in, it was $189.
Right.
No, I wanted it. I wanted to buy 1 or 2 shares. I wanted to spend $60.
What here says that they won't let you in, or is this another source you were counting on?
So I'm looking at the chart. So DoorDash went public on December 10th, I think it was. I'm trying to find see if they're gonna let me see the chart. And so this is it. I believe it went public December 10th, but the chart is not showing until December 11th when the retailers, us, let me make sure I get that wording right. Retail markets are the big hedge funds, the big boys, the suits. So when consumers can get it, when it gets to the open market, that's what we're seeing here. So there was a day, like it went public, they're ringing the bell, but I can't buy it. I can't go to the NYSE and buy it. It was blocked. Like you gotta wait. And I was waiting for whatever that regulation period is where the retail buyers get to buy first. Like they got first dibs. That's what I learned. Like they have first dibs. It's not even. So that's what I'm basing that. That's what I'm going
Now,
on.
when you say retail buyers, Scott, you're talking about the suits.
The suits.
Okay. And we're
Hedge.
we're the consumers.
We're the consumers. So the
Okay.
suits, the retail buyers are the hedge fund managers, the people who are managing big boatloads of money, the people who would go into your portfolio and try to move your money around and make you cash positive.
Okay, so let me understand this. So Rosemary Stewart decides to offer an IPO at whatever. I don't
Yeah,
know.
there's a whole formula to figure out what your
Right.
IPO, your initial public offering price will be.
Right. Let's say it's going to be let's say it's going to be $25 a share.
All right, you're gonna offer an initial
So
public offering at $25 a share. Yeah.
so who gets the announcement of my public offering first?
SC with the security, all of this
I
goes
have
through
to
the
go through
Securities
SC. Okay.
Securities Exchange Commission. So the
Okay.
people who are watching those publications,
Mm-hmm.
watching those announcements, those are the people who are in the know.
Mm-hmm.
Oh,
head-
Rosemary Stewart is about to go public. Okay, what's her business?
Mm-hmm.
What's the projections?
Mm-hmm.
Oh, it's going to enter at 25. What did we project that it will go to? What do we speculate this price will increase to? Well, if you buy this many of shares, at this time, we can drive that price up to, $34 a share.
Mm-hmm.
And so now, okay, well, let's leverage that. Let's get 500,000 shares. Because that's $16 or whatever that amount. I don't even remember what I said anymore. Whatever that $20 increase when we push that price up, a $14 increase, times 500,000, we can go to we can go to Cabo this weekend, right? I can buy that boat off of this investment.
So it's just confirmation that the house is always going to win.
House is always gonna win.
Okay.
House gonna always win.
Okay.
Well, we gotta start building houses though.
Scott,
Mm-hmm.
I just wanted to tell you this before I forget, which was, you were talking about in terms of money being gives you choice. The thing that one of my mentors, who's an entrepreneur, actually taught me back in my 20s was that he uses the word options. He said money is not, you don't want money for the sake, it's not for the sake of having money, it's for the sake of giving you options.
Mm-hmm.
So which is what you're saying, like what kind of house do you want to live in, what kind of neighborhood do you want to live in, what kind of food do you want to eat, what kind of car do you want to, is to give you options, is what money gives you. If you want to live in a safe neighborhood, or a violence ridden neighborhood, just what options, that's what money does, give you options.
Or whether you want to buy a house or, rent or buy a condo or
live in a tent. It gives you options.
And one of the studies that I looked at, because I've sat on the board for Streetwise for a long time, and you all have heard these stories that some of those homeless people have money. And so some of them, not a large percentage, of course, but a lot of those homeless people, some of those homeless people have money. But they're not like, I'm not about to give the system my money. I live in this tent before I do that. I ain't buying no car. You know what I mean? I'm not paying no utility bills. Keep my money. And that's a choice. It's a real choice. It's like, wow, okay, all right, I see you.
Okay.
Yeah, or like you said, or they choose to live modestly. And some very rich people live very modestly. They live in the same homes that they had before they had a lot of money.
I'm reminded of the story of this washerwoman in the South. I guess she's been dead now, maybe about 10 years.
Oh yeah.
She was she took in wash and did laundry. And when she died, she had over $1 million that she donated to one of the HBCUs.
Yeah, I remember that story. I have a cousin who's extremely wealthy, and I remember seeing his house thinking like, what? Like that's regular. It ain't what I thought you would be But it was, I mean, okay, that's how you keep your money. I see you. Okay, very smart.
But it like, did he use it in a maybe a modest house, but in a really nice car or vacations?
Definitely really nice car. Definitely a really nice vacation every year. You know, I'm sure he does things right. He has a lot of brothers and sisters, and you know. But I just assume that the level of, I mean, I'm talking money beyond our billionaire, right?
Oh.
And I just assumed that it was going to be something that I would be wowed by, and it was probably looked like just like a $200,000 house, you know,
Wow.
regular. It's like,
Warren Buffett says, lives
yeah,
in his house,
right,
he's just done upgrades. So that makes sense to me. If
yeah.
you're in if you're in a comfortable neighborhood and,
Mm.
your house got good bones, you like it, just maintain it, upgrade it.
But you know, many of us we like
Right.
no money in the bank, but we fresh everywhere else. I know, I did it. I did it. You couldn't tell me. Everybody, you just assumed that I was still straight. Ain't nothing in the bank. Terrible.
Now he rolling.
He rolling. He is.
He giving the wheels. Yeah, he got that nice car. He rolling all right.
Rolling,
Shameful.
rolling down the river.
Yeah. Yeah.
There was one of the investment guys that he was advocating doing things automatically, so you don't have to like set to have certain things, investments done automatically, so you don't have to think about it. And he said that one of the things that that what you just described about you is what in Texas what they would call big hat no cattle.
Big hat, no cattle. That's right, right?
Yeah, I like that.
Yeah. So let me just go. We're coming up on our end. You all know I just showed you Robinhood. Coinbase is, I believe Coinbase is just cryptocurrency. Is a platform. Take a look at that. I was just telling my mom that, now it's requiring me to have it. Okay, so you can do Coinbase. I also, Mom, I went on ahead and did it for Trent and Daniel.
Okay.
I opened up I opened up an account with TD Ameritrade. And what I was telling my mom, why I decided, and TD Ameritrade is a company that is rich off of slaves. They are. So it pains me that I'm rocking with them, but because they off slaves, but it's hard in this country, right?
The Jesuits, Georgetown owned slaves. So
yeah, so it's
there
tough.
you go.
It's just we in trouble, y'all. We gotta figure this. We gotta figure this stuff out. But the reason I did a TD Ameritrade it's something that I can't do on Stash, Coinbase, Robinhood, any of these other platforms is I was able to set up, the actual real documents for the beneficiaries of this account.
Right. That's
right.
important.
Like, and so the actual certificates will be sent. You know what I mean? You don't I don't see, and I'm still doing research where I get that with the other platforms. Right. So I'm at an age when I'm always thinking about my mortality. Right. So I started with, putting $50 in here. I set the beneficiaries for the account, and that was important to me. And he's already, and this $50, maybe I put more money in it at some point. Maybe I never do. I think this is in, I don't even remember. It's an emerging stock. What did I buy? Something. But anyway, you have TD Ameritrade. We talked about Cash App. You have Robinhood. Somebody said Stash.
Mm-hmm. And there's Stockpile too.
Stockpile is another good one. That you can do like right now, fractional shares, small money, let it grow. Shamel can tell you. Shamel started a year ago doing some real investments, and Shamel, your portfolios, are you still there? Your portfolios are performing pretty well still. And is she still here? Yeah, she probably stepped away. So I know she started like
Okay,
back in
right, right,
June or
right.
July and doing some stuff, and you know, she's up like really, really nice in real time, in real life. So let's see. Celebrate Women's History Month with $10 from Stash. Okay, subject to terms. So look at these things. You all have enough to get started. You have enough knowledge. At this point, it's just continual learning. That's all I have for you all today.
Can I ask you a question?
Sure.
Just in terms of, like I said, I only looked, kind of looked at stuff this one day this week. And of course, when I looked at it, I realized that like Tesla had dropped to 550 recently. It was
Yep.
like,
Last
oh my
week.
God. And so, but even again, when I just saw it the other day, it was up already to 690. So the thing is, I'm just asking you because I didn't look at your portfolio or anything like that. Did you go in and did you go buy any more Tesla when the price was dropping?
No, not in the game, not in anywhere, because I own some Tesla in Cash App. I didn't even mess with it there. So that's called, sometimes and it's very intentional. Sometimes that's called a leveling. Like they level the stock price, like the suits, the powers that be, drive the price down in order to entice more investors to come on. So that's what I thought in my mind. That's the story I made up in my mind about what was happening with Tesla. Because there's no way I'm like, I'm not about to panic over Tesla. Tesla is like that Bitcoin. Tesla new. Tesla is just getting started. Like, there's no way this is going anywhere. So I just relaxed. I wasn't even worried about it at all.
No. I don't mean in terms of selling. I mean to me, because when I saw it, I was like, man, that was a great opportunity to buy. Because look at it, it's up $143 now.
Yes, and
In
that
a
would have
week.
been a great. I thought about it, but I didn't, because in the game, I didn't have any. I didn't have any more money in the game to do it.
Okay.
And honestly, I don't think I don't have much money this week to really do anything. Because I have to be very, very careful with whatever I bring in and have at this point in my life, right? So no, it just didn't. It's just, for me, I saw it as the dip. It was a great dip, and if anybody could have gotten in on that dip, they would win. I didn't. Erica, I did want to talk to you. I know we're over. I promised I wouldn't go over. We are over by 3 minutes. I have some questions. I think I'm putting you on the hot seat a little bit. I think your investment strategy is, very, very what's the word I want to use? Like, cautious.
Yes, I'm conservative.
Yeah, you did say that.
I did take a little risk this week. I bought some higher end things. So
okay, I didn't look.
Yeah, I bought some.
I used your portfolio when I was talking to my students, because this is the first time I've ever seen someone that I've taught this like use that strategy of. Do you know how many stocks you have?
Yeah, about over 50.
Over 50.
Yeah.
Okay.
I bought everything I used. And
I think it's phenomenal. But I'm looking at, well, see, now you're actually up. You're up $2,400. So it's really nothing I can say. I need to shut up because like it's working.
Well, I did what you said. My girlfriend, she said the first time to buy the stocks in whatever in your house and that you use. So most of the stuff is what I use. And the other ones are something I would like to have, like Google, it's a high stock, and I bought a few more. I initially started with 1 and I bought 10.
Yeah, I saw that. I was like, wait a minute, she got Google on here already. Did she confuse us? And I was like,
no, I just bought a couple of risky, high risk, higher one in stock, and I bought Hasbro, the game.
Yeah.
Board games is in there now. So
funny about that Hasbro, because Hasbro's been up. Hasbro's been coming up since the pandemic.
Yeah, a lot of people playing games, so that's why I bought it.
I know. I just bought Jenga or something. So yeah.
A lot of people are buying into that games and different video games and board games. Yep.
So I thought I had something to say. I really did. I was just like, man, that's a lot. But hey, I have nothing to say. You're up $2,400. I'm not. You know what I mean?
Yeah, I have my little notebook. I just it's a couple more I want to buy, but I ran out of money.
Yeah. I had dropped all the way down to 9th place at some point. I did move some stuff around. I was showing my students some. I accidentally bought this Nike. It went up, but I'm selling it right. I'm waiting on my cannabis stocks to come back up. That's what I'm banking on. In real life too.
Okay.
In real life, like that's the emerging market that I'm betting on. Cannabis stocks, because you also know there are no American cannabis companies traded on the stock market yet. That's how emerging this market is, because it's not federally legal, so you can't trade it in America. You can't trade American companies on the stock exchange. So all the companies that we're seeing being traded, these are mostly Canadian companies.
Scott, what determines, what motivates or determines a company to go IPO, to offer an IPO?
Making more money.
Oh, okay.
Also,
because what you're saying is they're raising cash.
They're raising cash, but here's the thing. Look, here's the trick, guys. They're leveraging debt.
Okay.
Many of these companies, quite honestly, have books that look like your portfolio. Like the books can show, oh, we got $170,000. But we owe the 73,000. And so that is what some people are investing in, debt. So, oh, these people owe you money? Oh, we can buy that debt. We can buy this debt and make money off of the debt. Because they'll pay. The people that owe, now they got to pay with interest. So a lot of these companies, big companies, it's like how you just raised $300 million. You got to pay salaries. You have to pay utilities. You have to pay insurance on these people. Where y'all making money at? And I learned through, it's debt. Oh, so there's a benefit to being in debt when you're a company sometimes. Yes.
Wait a minute, Scott, I didn't understand what you just said.
Yeah.
Can you explain that again, please?
So it's definitely a higher advanced concept of leveraging debt in business.
So for instance, and I'm trying to just use something concrete. You take one of the tech companies,
Amazon.
And obviously, so if you take a tech company, before they became profitable, of course, they were in debt.
Absolutely.
Right. So can you use that as an example?
So Uber is another one. Uber, I don't think is profitable yet. And so they're betting on in the future, in 10 years, we'll be 10 times more valuable than we are today. So you're in debt. We owe, let's do $73,000, right? Okay, well, let's fundraise. We need $300,000. Cool. We get to $300,000. We pay off who we owe, but now we still owe the people who just gave us money. We owe them. So we're working. We pay it. We make a profit in our business, right? And show our books. Our books show we had 170,000. We started with 100. We made 70,000. But you still have to pay off your debtors. Well, you never really pay them off. You keep leveraging the debt.
Oh my God! So that's like juice.
Leave it to a black mama.
And look, and I may not, and Dr. Durr, let me pause at this point, because there's some pieces to this understanding leveraging debt as capital that I still need to shore up.
Okay.
but I do know, like companies like Amazon. I think Amazon just started making a profit.
Mm.
Uber is not profitable yet.
Okay.
And so they're getting investments based on future projections, just like an NBA player, an NFL player. You're getting investments based on the potential,
Okay.
but you still owe us, right? And
So wait,
sometimes they
but when
say
you say "oh us," are you talking about the investors or
the
you talking
initial investors.
about,
And so and one way to get an infusion of cash is to go public.
mhm,
Get the public to buy in. Who's the public? First is the brokerage houses,
Mhm.
the stockbrokers, the managers, fund managers first. They come in, they drive your price up, they make a lot of money,
mhm,
right? You got a lot of cash, but they also made a lot of money.
mhm.
And then you get the general public, the little people, they can buy and do these consumer trades, these small trades to keep the business kind of cash, trying to keep the business cash positive. But even in that instance, you're showing that you got 170,000, you up 70,000. You still got to pay off those people who initially invested. They want their money too. Those investors want the money they gave you plus interest. And so somebody could come in and say, you know what, we'll take that debt off your hands. We'll take the debt off your hands. We'll buy the debt.
Right, but you're not talking about the folks who are buying the stock. You're talking about just somebody else who's buying the debt, right? Is that
Well, buying I'm talking about people
No, and
who
I'm
come in and
asking.
buy the company.
huh?
Like they'll buy the company.
Okay.
They'll invest in the they'll what's the term that I'm looking for? They're looking for a larger stake in the company.
Okay, but that's not people that are buying the stock, is it? You're not talking
Well,
about
no, it's not necessarily no.
Okay.
There's a difference between shareholders and investors. I know that sounds weird because the shareholders are the investors. We're investors. I'm talking about no. There's a difference between people who are trading stock and people who are investing in the company.
Okay.
Let me say that.
Right. Now I get what you're saying, because it would be the same as like with a private company. They're not selling they're not selling stock, but they got other people investing in their company.
But as a private company, I'm a private company. I can sell stock. I have shares of stock that I can sell. Mine, I just can't buy them on the open market. You got to come to me.
Mhm.
Okay. But I'm just saying, but if we just take that off the table, and so I'm trying to understand the concept. Let's just say they're not selling stock at all.
Okay.
But you can have investors investing in the company.
Yes, you're giving up equity. You're giving up ownership.
Right.
Decision making. Who gets to vote based on those investors? No stock involved. You have investors come in, invest, and in exchange, they either want, a percentage, a return on their investment plus an increase, or they want ownership. They want a seat at the table. They want to vote. They want to help impact the decisions of the company.
Okay. Okay.
We'd have to keep unpacking this at a later time in the advanced class. There is an advanced class coming, I believe, in April or May. A little bit more, and it will still be 3 days. Still probably the same amount of time. I'm working through some of those details now.
You all stay safe. Enjoy your weekend. Enjoy this
Absolutely.
wonderful weather.
Yeah.
Thank you so much. Scott, give me a call. I have some information I want to share with you.
Okay. Thank you all. Tony had to go.
Thank you, everybody.
All right. See you all. Enjoy.
Good one.
All right. Stay wonderful.
You too.